Right, legends, welcome to the London live session. So, I've taken a long on dollar yen. I've done a half size and a stop loss there. I'm looking to load the rest down here. Okay, so go to 5 minute. I want this gap to fill in. Show me some bullish price action. I want to see this low hold. Okay, if this low breaks, then I'm probably gonna have to cut the position. Okay, so although I've got my stop loss, down here. Okay, um, I'm not gonna hold it for the whole stop loss. Okay, so let me explain the reasoning behind it. So on the daily, right, previously spoke about, okay, if this closes bullish, then this confirms it's a daily block. Okay, and in the middle of that, we've got this pivot here to work with, which is this down move led to the high. That caused last week's high. Okay, and then we came below it, resistance, 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 broke out. We expected to find that support. So I posted a chart earlier saying, okay, if we break this grey box or marked a break of this grey box would indicate, we're going to go lower, and probably it will be a fast drop and probably fill this in. Now at that point, I think we could get the next leg up. For example, it's the same pattern that that's unfolding now. I was looking for it here. So if you look at this, right, this is the up down move that caused that high. Below it, resistance, resistance, break above it here. You respected the middle of it, or respected this breaker once you broke it cleanly and then rallied. So any pullback here would actually be a buying opportunity. So this is on a smaller time scale. This is the same thing on a H1. Okay, you expect the buying here, but below it, I'm then expecting the fast drop to fill this in. So lower time frame wise, we've not only is it a daily block we've come into, okay, but this pivot here, which is the main part on an intraday basis. Okay, going to the 15 minute, we've taken out these stops here. Let me load the rest. We've taken out these stops here. Okay, and then if you look carefully, we got a low there. This black line is last week's high. Found resistance there. Lower low, took out the stops, then a high, then a higher low there. I'm seeing that as a breaking market structure. Let me load the rest of the position on. Okay. Okay, keep it there, but if it breaks this, then I'm gonna have to cut it. So it's filled in the void now. If it's gonna go up, it's gonna go up now. No fucking about. Okay, so here I'm considering this as the breaking market structure. Intraday basis, we've got a little pivot here. So remember, this is that last week's high. So if I do that, and I do, oh shit, what did I just do? I just did something. This is why I don't like using MT4 anymore, because of this fucking thing. I like charting with it, but I can't trade off it anymore. Just let me just. Oh my god, what have I done? Yeah, that's last week's high. So this thick line is last week's high. Okay, now you can see the accumulation going on around this area here. Okay, above it, below it, above it, below it, and then here, this block here. Okay, or this retracement sends it up higher, it sticks above it, and then it finds support there, and rallies up above. Then they continue, but at that point they haven't really touched that breaker yet, that H1. So they spike it down again, below it again, clean break below it. And at that point I said, okay, if this is gonna go, let me see. I wouldn't enter short here, but I'll enter a short here. So this was like a warning sign. That's why I posted the chart. Maybe they don't want to send it higher. Maybe if they break this, then it's gonna be that level I marked out below. So I'm watching it, and this is where the lower time frame confirmation for me comes in here. Now we spiked into it, taking out the stop. Okay, the step one, okay, mid or high or high low. Okay, now you gotta be a warning sign that, okay, is this a low? Then the break of this pivot here is sort of saying to me, okay, we're not interested in the shorts now, we're interested in the longs. And what we gotta do is we gotta maintain above last week's high. Okay, so imagine how the weekly candle is looking like. Picture the weekly candle. If it's broken the weekly last week's high, and then it's starting to find resistance there and starting to break down, that shows what a high could be in. Okay, but it's not showing that, so it's going back above it, and right at that weekly high, last week's high, we've got this pivot here. So we're hinging it off the higher time frame, but we're zooming in on the lower time frame to get more precise entries and more precise, you know, early signs of, okay, it's gonna go higher. Does that make sense? I went there a bit fast, didn't I? Even for my standards. My first target is this high here. Okay, my first target is this high here, and the secondary target is uh, is this high here. Now we've got all the. I personally think we're gonna go back up to 114.36, but for intraday, I'm gonna be aiming for here. Let me get the ADR out. Where does the ADR come in? Average daily range. ADR comes in around 113.14. Okay, so you could target. So I'll take some off here. It's not a bad intraday target. Okay, take some off there. So what I'll do is I'll keep one position. I'll take the profit. I'll take the profit here for one position. Okay, and then second position. If it's gonna go higher, it's gonna be 113.35. 3.35. Okay, just above below it. Okay, but personally, I believe we're probably going to reach that. Why is that level? It's going all the way back to this range. Remember, for ages we were talking about this range while we're within it. That's the range low. That's the range high. Why? We tried to break it there, but failed, rejected. So that is the key level they can't get above. On the downside, here they try to break it, they can't get below it. That's the key low side. You got your range now. For ages, months on months and months, we ranged. Again, confirms that they can't break it here, they can't break it there. Get back to that side. As soon as they break it, okay, we expect the expansion down, but no. As soon as they get back above it, what confirms this range low is, look where they find support. There. So this is a macro view. So that being said, where's the magnet? Once it gets back below above this green line, so at this point, where's the magnet? Sorry. So on a daily basis, where's the magnet? Now that say we're here right now, okay? Where would the magnet be? Just by looking at this daily chart alone as a bias. It would be the range high, agreed? So, which means this was all a deviation. This was all a deviation. And naturally, the next 50% of a range as well. And then this. Now, where does 50% of the range lie? Just roughly drawing it. Oh, fuck you. Yeah. Okay. And that is why I want to take a long down here. See that's 50% of the range. Okay. This is where I think it'd be pivotal now. If this was to break here, okay, right around the middle of the range, then we're going to this side. Okay. But if it comes back down to here, shows bullish price action, expect a continuation. So you've got your three areas. That's the extreme of the range low, extreme of the range high, 50%. We are dealing above 50% of the range, so the next magnet is going to be that high there. That's on a higher time frame basis. Okay, so let's see what happens now. So another intraday target would be here. So it depends. Are you short-term trading? Scalping would be here. Okay. See, this is me without even having to draw the daily open or anything like that. It's just pure price action. Okay, so I'm not saying that that's not price action. Now I can draw further confluence to the idea. Let's look at the daily open. There's two daily opens I use. One, the midnight New York, okay, and another 0 GMT. Which daily open is the market using now? Where's the 0 GMT? 0 GMT lies basically where last week's high is. Do you think it's a coincidence they closed the market and opened the market right at these weekly levels? It's no coincidence, okay? Get that out of your head. There's a reason why they did that. So when they broke below it, they used 0 GMT open first, okay, as resistance. Once they cleared this little pivot here, look at this. They can't close below this. Forget the wicks. Look at the bodies above 50% of this, which shows the buyers have stepped in, right? They're not willing to let it go that low, okay, which confirms our bullishness. Now, so defining support around the midnight open. How does the daily candle look like? Look at that. We're expecting expansion now. Agreed? So this was a bearish candle. People thinking possible reversal. That's fine. They're taking up this previous day's high. But look, the next day they opened. They wick into the daily block. They wick into this breaker here, and unfinished business from the higher time frame perspective. This range high here. Is everybody clear with that? Okay, so now let's see what market does now. So if we close above here, then this is confirmed order block. So later on we could get like a, we're getting in early right now. So unless it takes off rapidly like this, okay, don't be surprised if it goes up and then there's a pullback into the weekly, last week's high again, which lies around the this block here. Okay, don't be surprised about that. Okay, but the higher time frame is suggesting to us higher prices. To be honest with you, I'll draw out both and then I see which one is price reacting, pivoting around the most. In this case, I can see price is pivoting around the 0 GMT. I mean, if you look at it, can you guys see? Look at this. See this middle line here? This line here? See the bodies? They can't really, close. You can see I pivoted, bounce up. So it's the mean level this is. It's a mean level they're accumulating at. Anything away from it are deviations, okay? Or manipulations of shorter time frames. That's what it is. So you can see there's a big accumulation around here. If I scrunch this chart up, you can see this is accumulation. Okay, accumulation then leads to expansion. We're now anticipating the expansion now. Why? Because we've hit the key level. Once the key high time frame level comes in, boom, let's go. Does that make sense to everybody? Is there anything you're confused on? If you are, let me know. My voice is still fucked, so I do apologize. Past week or two, it just won't go. So if I do sound like a croaky old man, probably won't have long to live. I do look at dollar index a lot. But thing is, right, when I'm trading the yen likes to do its own thing as well. So the way I look at dollar index is for get a feel for what are the other major. For example, Euro USD, I look at it closely. Why? Because it's heavily weighted in the dollar index basket. So if index goes up, euro is going to go down. But if dollar index is in consolidation, that means pound dollar and Aussie dollar and Kiwi dollar can do its own thing. Does that make sense? So, but overall, I mean, dollar index still hasn't taken out those stops. So I'm leaning more towards the bullish side. This is that weekly level, okay? So I'm seeing this yesterday's candle as a trap because that's a bearish candle, isn't it? So getting rid of this. That is a bearish candle. It's coming off a weekly level, okay? But keep in mind what I said. Remember, I said previously, how many times are they going to keep taking it, tapping that before they say, fuck you, we're going to say take it higher, okay? So on a weekly basis, 1 week into it, 2 weeks into it, third time you got close to it, and this is when even I was getting bearish. I said, but what would have confirmed it was a break of this. It didn't break that. And then, well, look what's happening. Look at the body. Then last week's candle closed above this week's, previous week's high. So that was saying, you know what, screw you. So the way I'm seeing it is we're getting a big expansion now. I'm expecting a big expansion. Um, at least to take out these stops here. So with that bias in mind, I mean, I don't even have to look at anything else. I can look at the 4 hour and daily and say, okay, I know where market is most likely to push towards. So the weekly is going to tell you, a bigger, higher time frame is which direction is it most likely to go towards. Does that make sense? So that means if I'm trading dollar pairs, what's my bias with the majors? It's going to be bearish, the majors, isn't it? So but lower time frame does change that. I mean, I will have one bias starting the week, but in the middle of the week I'll change it. So don't be think, oh, you can't change, but you can fucking change bias. Sometimes market looks like an obvious short. For example, at this point here, I said, okay, as long as we're below here, this was bearish. Okay, so the weekly candle was looking differently, but now they got above that. That removes the odds or probability for a lower market. It wants to send it higher then. So at that point, that's fine. Does that make sense? So out of all the pairs, I'm looking at dollar yen and I'm saying, okay, bullish dollar, that's fine. We've come to a key level here. So those that missed out on this move, okay, they're thinking this is going to crash. I would suggest this is crashing if it breaks this. Just this. Why? Because this is the mean area they're accumulating around. Someone said, how can you have a high time frame bias with a H1 chart? Well, I'm not basing on a H1 chart. H1 chart just gives me zoomed in more. I am basing on the daily higher time frame, but this means that if it breaks this below here, then that means this is the key pivot here above it, bull bear area. This is based around the higher time frame. So it's okay to go on lower time frames as long as you are basing it around the higher time frame levels. Okay, so we've zoomed in on a 5 minute, okay, and a 15 minute, but this is a weekly level. This is okay. So let's see now. It looks all good for expansion. Now what we don't want to see is get back below the last week's high. If it's gonna go back below the last week's high, it means two things. One, it's gonna drop. Two, it's just gonna keep consolidating. And if it's consolidating, we can't do nothing about that. Okay. So for scalpers, I mean, this would be a nice target for scalping. So I'm not gonna say if you want to take profit or not, but if you're a scalper, this is a not bad area. Why is this a magnet for price? This is a magnet for price because first and foremost, we've got a gap here, thin, inefficient movement. Secondly, it's an area here, so this up move let to move down. So if they're selling here before, they could sell here again. So if you see a little pullback from here, that's fine. That's expected. Okay. So for a scalp, I mean, from this entry, that's not bad. 13 pips. Scalpers are usually 4 or 5 ticks. We got a professional scalper here, Mark. He's a really good scalper. But yeah, yeah, that's it. Another thing is dollar CAD. Like I said, I'm not sure. We had we didn't touch this daily block on the dollar CAD. Okay, remember the buy side for dollar CAD. I said okay, we're most likely going to retest into that. We didn't do that. It left that high in. Often market will leave a high in to take it later on. Okay, why? Manipulation. Okay, so but look what it's done. Look at how they you know design the price to look like it's going to go lower. Okay, this down can push up. The fact that I didn't touch that and push down here, that was a warning sign for me. But look what it's really done. Basically, around this is when it comes to the storyline. Where on the daily basis, that's that daily key day. That's actually a weekly level or monthly level. That is, it comes below it. Okay, below it, we're looking for bearishness. But this is why I wait for confirmation. Okay, there's one thing breaking and closing below it. There's another thing, then retesting and showing me bearishness. There was no bearishness here. So when it got back above it, that proved to me, okay, this was just a pure manipulation. Okay, this was a pure deviation from, okay, to convince people we're going back below this high. Then when you get back above it, what does that show you? There, they should send the market at least into there then. So now you're thinking, okay, any pullback now, this low has to hold. Why? We want a higher low and we don't really want to see it close below that. Look what he done. Wicked into it once, close back above. Wicked into it again. This is the impulse move here. Okay, now once that closed, this created the order block there. So any pullback into that is going to be what buying. So if you want to, probability wise, this should now go into there. So by the end of the day, what you do is screenshot a dollar CAD, right? Even if you're not trading it, screenshot dollar CAD and write in it, I expect it to go down here. So this say target here. At least say minimum target, it stays high. Okay, even if you don't touch that, the stops are gonna be resting there. Then look at it at the end of the day. Did it go your way? So that's like seeing it in real time. It's easy doing it once it's happened, but get into the habit of, even if you don't have the balls to trade it because you're learning, either demo trade it or take a screenshot and say, okay, this is how it looks like. I'm expecting it to go down there. Then at the end of the day, see how it went. So those that are developing, that's a good exercise to do. It may seem simple, oh, I know what I'm doing, but actually screenshotting it, it's like an exercise you're doing. You're forcing your mind to do this repetitive things, which sticks in your head then. When you screenshot it or write it down, it sticks in your head. When you say, oh yeah, I remember, you don't really remember. Okay? And also on dollar CAD, you see this is the mean area. So this is the monthly open, this purple line. Notice how the monthly open is a key accumulation area. It's actually acted as the mean. Okay? So if you look here, accumulation there, you can see huge accumulation here. Keep touching it, then lift off. Touch it, break below it, above it, bullishness, below it, a bit of bearishness, above it again. So now they haven't come back to the monthly open. They've come to this area here. So this accumulation here sends it above. Once it below, it sends it below. Once it above, and it's a daily block as well. We should start seeing lift off now. Okay, um, if we, yeah. So that's it for dollar CAD. And now we've got that breaking market structure there. We shouldn't really come back below the low. So you should. So for example, let's take this. I'm not taking this on my live account. Okay, this is just an exercise. Okay, I'm taking a long here. I'm gonna keep my stop loss here a bit wider. Why? The reason why is because we've got an order block here. Okay, so I'll keep a wider stop loss in this situation. Now you could keep it below here and you might get spiked out. Yes, this is a breaking market structure. I shouldn't, but sometimes I leave a wider stop is because if there's any room for error, I like to leave it below the whole mean area. Okay, this area here. Where's the target there? So this is where you don't even have to sit at the charts all day. This is like, setups like these are ideal for people with full-time jobs, because as long as you know on the higher time frame where's it most likely to go, where is my invalidation level, well there, okay, below here, where is it most likely to reach for, well this daily block but minimum target there. You don't need to sit at your charts, you just do it, leave it in like this, and that's it. Does that make sense? So this is an ideal trade for those that are um, can't sit at your charts. Trade like this. Is again, what's the risk to reward? So that's 78 pips, 36. So it's 2 to 1 at least. It's not bad. Now it varies. Obviously, if your account's large, you could be risking 5 grand for 1 hour to make 10 grand. If your account's small, well, you'll get there. Any questions? Okay. So this is the first sign, it's the pivot here. It comes, respects the pivot, makes a higher high. So at this point, normally, that usually is the sign to get on board, isn't it? You want to see this grey box hold. If it goes below this grey box, then most likely this was just manipulation to take out these short-term stops here. So at that point, I'm going to have to be forced to cut the position and then either look for short entries or sit inside till there's something clear. So right now we're filling in this void. Okay, that's fine. If I look at this candle, well, a bit of a flat candle here where there's no wick. Usually market rarely leave. For example, here it left no wick, it pushed up, a wick down, then pushed up. So don't be surprised if a wick's down into this block. Very rarely do you get candle open with a flat wick, with no wick. So this line is also the GMT open as well. So this is a retest of the daily open now. You should touch it if it's good and then rip. If it doesn't, then it's not good. And then we'll cut it. So the only thing we're in control of right now is the risk. The rest, the market's got to do. So what's this dollar CAD saying? Okay, dollar CAD's pushing up. Should take out these stops here. But short term, you'd probably be reaching for this H1 block as well. Okay, short term. What a time to discuss boredom. Huh. So look at that cable. Okay, now yes, this can be considered a breaking mark structure is going lower. I just see cable got that tendency, right? What do we have today? We've got retail sales. Okay, often it'll spike up once more, take out these clean highs, then drop lower. Personally, I do believe we'll go lower at cable, and I believe we'll probably reach it to that. At that point, is that a reversal? I don't know. We'll have to wait and see. Okay, but the next magnet would be that to fill in this. Okay, so it is technically a break among structure, but I'm just worried about the retail sales. It'll probably spike it up a bit. That's the only thing that's putting me off the cable. But we'll see. Because it is breaking mark structure. It is breaking down now. That's these eyes there. And we've got a bit of a void that we didn't fill in. So what could happen is one more spike up into there. So for example, if it came up and spiked into that, took out the stops, then any breakdown I can short it with confidence. I know where my risk is. You see what I mean? Right, this hasn't done that just yet. So it could just fall and I miss out. But if I miss out, that's fine. Next trade. But the thing is, right, when I'm not feeling confident on it, then I'm not going to force myself to take it. And if I do take it, which I shouldn't be, it'll be smaller risk or wider stop loss. So I know I'm wrong above here. Where am I wrong above here? Why? This is that range low. Going back to the 4 hour. That's that key resistance range low. Okay. Where's the target? There. If what's the risk reward? 54 pip stop. 80 odd pip target. Okay, okay, it's more than 121. Um, so I can either do that if I really want to short it, or see and wait if it gives me a spike into there, then break down, then I can short it with a tighter stop loss. Okay, let's quickly go back to dollar yen. Okay, now see that the wick's been fulfilled at that week level. It's gonna go up now. I want to see it go up now. If we make a clean break below this, okay, then this becomes like a breaker, okay, this down move. So that means if they're buying here previously, they're probably going to be using that for selling. So it needs to go up now. Retesting that weekly high, retesting the 0 GMT open, okay, it needs to start pushing up. So in this situation, what I'm going to do, tighten my stop losses to here, because we didn't really touch this block here. So this low comes in at call it 72. Put my stop loss at 72 now. I mean, not necessarily because of 5 minute. I mean, sometimes you can close and then immediately reject back above here. See this here, 5 minute close below here, but then immediate rejection. So what I'll be looking for is immediate rejection back up. If it doesn't give me that immediate rejection back up, then most likely it's not good. Okay, so all my stops are now been trailed to 72. Okay, let me just move that across. So we've reduced our risk now. Okay, so we should. The reason why I'm going here, I'm giving a bit of breathing space because sometimes you can't be too tight. Okay, unless under certain conditions you can. So, you know, once we've got, for example, if this had touched this, then I would. Okay, but now we're using SR as well, so we shouldn't really be coming. This is the complete invalidation level for me. In intraday, this will be the complete invalidation level. Sometimes we can wick back down and swing fail this low, and the reason would be for it to reach down here would be this block here. Okay, so that can happen, but we'll see. See, when I said to you this wick, they don't usually leave flat lows in. You can see that happening now. So ideally, what we want to see is if you can, once you can get back above this high here, we should start seeing momentum upwards. Okay, so we've come down, filled all this in. Okay, if it gets back above this, then see it's a small range now, isn't it? On a 5 minute basis, it's a small 5 minute range. That high to that low, we're back within that range. How deep are we? Okay, we spiked it to 50% of that range, which lies within previous week's high. Okay, so if we get back above this, okay, then we're back above this range high, then all this movement is what is a deviation within this little range. So we should not be coming back within it. We should start seeing movement out of it. So it's say if I was in here, what I would be waiting for like a more confirmation or conservative entry would be for it to close and start pushing back above this high here. Once it does that, then I can enter. Does that make sense? So the range concept doesn't necessarily have to be applied to just the 4 hour or a daily, intraday as well. Okay, because you can see, okay, where should it go, where shouldn't it go. These are dealing ranges. Okay, so this is the any consolidations or range, they're something that Chris Lowry calls dealing ranges. So they're dealing within here now. We want to go back above it, create a new range, push up. So okay, that's a nice sign. Okay, bullish candle. Okay, let's see how it pushes up. Is everybody clear with that, or is it like making no sense to people? Is everyone understanding what I'm trying to say? Okay. The main thing is, even if you're not in here, is to understand the reasoning behind it, okay, and as it's happening live. It's easier to short. I can say to you, well, see here, I shorted it there because we've got a see, we've got a breaker there, and I shorted it there. But what are you thinking as it's going in there? What is your thought process as this retracement is happening? What is your thought process? You know what I mean? And what I mean by flat candle is, usually you don't see a candle open and it wicks up straight away. Okay, you see the open, high, low, close thing, power of three or something, whatever you call it. Very rarely do you see a candle open and then push up. Very rarely do you see a candle, a flat candle. So see here, opens up flat and then it gets retested again. Not all the time. So for example here, it didn't get retested. Okay, but usually, for example on a daily especially, right, you don't see most candles will have wicks. Agreed. Very rarely will you see a candle without a wick. Now sometimes you see at the 5 minute, 1 minute, sometimes that happens, but very rarely. So this is why um, you don't get a new candle open and shoot up straight away. You get it open, and wicks down, and then pushes up. And just like the daily, when you're getting long, you want it to buy in the down move, don't you? So this is why we use the daily open strategy, trying to get on board in the wick of the candle, the weekly open strategy. So I say when it's above the weekly open, it's this. Below the weekly open, then we've got the wick of the candle to the upside id. So I like the fact that we're establishing support. So scrunching back on the higher time frame, we started to establish support back above last week's high. We deviated below it here. It couldn't decide. It made a clean break, got everybody in short, but now it's trapped. So this whole price action below last week's high is a deviation of last week's high. So looking back, we should start expanding above last week's high again. Okay, no time wasting. And what supports hopefully expansion is this consolidation. We've consolidated, we should start moving. Okay, is there any other questions? Other than that, I mean, we'll do a New York live session. I'll save my throat so I don't lose my voice. I can do a New York one instead as well. If there's any last question, if there's no questions, I'll close it. But nothing. Okay, so a clean 5 minute chart up, right? And let's look at the stops that are taken on daily. Okay, so let's mark out the range, and this will be the last bit before we close up. Okay, so once you got back within here, right? Ideally, where the stops are going to be resting. Say if this was a 5 minute chart, they are swing highs, isn't it? This is one leg. This is one leg down. Okay, we got intermediate highs where any pullback, intermediate high there, intermediate high there, but the main high, the stops are going to be resting here. Agreed? We haven't yet tested even this part, so there's stops there, stops there, stops there. This is the bait stops at this one, but the next high probability target would be here. So once we clear this high here, where is the next magnet for price? It's either an order block or the stops. Okay, liquidity is going to be resting here. And because of what we discussed, where it's just ranging within that high and that low, any movement above or below it are deviations. Okay, so ultimately I'm expecting it to go back up to 140.37, but we don't have to target that. We can take profits way earlier. Okay, because it's not going to get there in one day. It's going to take time. So that's why these for me are high probability targets reach for that swing high. Does that make sense? From a higher time frame perspective, and it's the higher time frame that's going to be that drive the market, not a 5 minute. So I've got a high time frame reasoning for it to reach that level. Everybody clear? Okay. Okay, so I hope you enjoyed that live London trade session. It's how I do my live sessions, probably about 2 to 3 times a week on average, whether it's London or New York. So with the dollar yen trade we traded today, pushed up nicely. Okay, I've trailed all my stop losses, stops and trimmed some off around this resistance level here. So you see this down move that caused the high of the week so far. It's acting as a pivot. So down move, let's move up, resistance, resistance again. That's fine. Hopefully we can clear this level. Okay, I can trail my stop losses further and maybe even add another position. But this is my first target, which is yesterday's high, and second target I'm holding for around here, 113.35. The other trade, dollar CAD, went nicely. Okay. Something I forgot to mention there, the reason why I'm behind is because this was a previous SR level. Because I had my other screen up, we retested it here. So once we cleared that, then that opened the gate for this high here. If you drag it across there, so we are approaching resistance here now. Okay, but I am expecting yesterday's high to be taken. So it's a nice trade. Stops have been trailed. Position needs to be trimmed off. Okay, and the remainder for here. Okay, so I hope you enjoy that. It's just an example of how I do my live trading sessions. Okay, key thing is to know is how I see price develop. You know, what do I do if this happens? What do I do if, you know, if that happens? What's my validation level, switching bias, etc. Trailing my stop. So just an overall idea of price action in real time, trading in real time. Okay.